Ladies and gentlemen, it's my pleasure to introduce Chris Brecher, Simpler Trading's Senior Managing Director of Stocks. Chris started his impressive trading journey in Chicago, turning a mere $200 into an astonishing $23,000 in just 2 short years. Not only that, Chris ranked among the top 5 in a group of 800 traders for over a decade. His special talent? Making complex trading charts easy to understand for everyone. Tonight, Chris will cover how he consistently earns profits on downside moves using a few simple strategies. Chris, the floor is yours.
Good evening, everyone. Good afternoon if you're way out on the Peak Coast. How to profit from pullbacks. I'm excited to go over this because this is what I do. I like to make money on the long side and the short side, but it's a lot faster and immediate gratification making money on the short side. And there's always short opportunities over there. Sort of ironic, I'm doing it on a day when the Dow was up 400. Believe it or not, there are even short opportunities today. But today isn't the kind of day I'm talking about as much as over a long period of time. There's great opportunities on the short side. This is what I want you to learn, is how to unlock the upside profit potential of down moves. The whole idea in here and give me 1 second. There. Sorry about that. Here's what you'll learn about unlocking the upside profit potential of down moves. Boy, I forgot to share my screens. I'm glad I wasn't showing charts. So all I'm doing in here is explaining on simple patterns that can help you unlock potential of down moves. I target 3 times faster gains on short trades in up, down, and sideways markets. And what you need to know about the break in the 40-year bond trend. Now, don't laugh, but today, guess what? Today, the bond market went nuts. We saw the bonds going up. Like I said, there's certain times to do things and certain times not to. But chasing uptrends can trash your trading results. I'll show you a absolutely perfect example. Here is Apple. I just have to show you that from today. This is what we mean about chasing up moves. Here is Apple right now. Here is Apple tonight. I mean, before earnings. Up at the resistance, down here, overbought. Stock is down almost 7 points tonight. That's exactly what this is about. Chasing uptrends can trash your trading results. You have to know when to get in things or when they're overbought. And the interesting thing is that in the July bull run, I did 25 trades in a row on the bear side correctly. I actually just copied and pasted that from the chat and from the alerts. And I don't like doing spreadsheets. Spreadsheets drive me nuts because you can put whatever you want. So all I did is I went through the chat, left click, and highlighted all the trades, copied and pasted them to Simpler, and they're like, holy cow, you made all these in a row, and they're all shorts. So even in that big rally, there were great opportunities on the short side. That's what I wanted to show you in here. All of this. So you might say, oh, well, you picked the top and all these. No, we picked the direction. We didn't pick the exact top. See these? They all had something in common. Those are things we're going to talk about in the class. I'm going to go over all of 3 different kinds of candlesticks. That's it. So you don't have to gob with 8 million different kinds of candlesticks because all of these will drive you nuts. You want to find the right candlesticks with the right technical indicators and the right fundamental indicators. So the left trend line, this is one of the biggest questions I get. So I was at the Orlando, the Summit for Simpler, which was great to meet everyone there. Then we did the money show. And one of the biggest nuts to crack for everyone is what do you do if you get stopped out? They know how to place stops overall. And I've learned too from experience. The key is, how do you get back in? How do you dismiss your ego? And if something overall still looks the way that you expected it to look, but you got stopped out, how do you get right back in? And that is a real, I wouldn't say it's an art. I think it's something that everybody can identify with my help. So here you go. 25 winning trades in a row. And I'm not telling you that I posted those in a spreadsheet. Those were actually copied and pasted from the alerts I send out. So that same strategy, I identified them. They just happen to be on the downside. Now, you might say, if the market's going straight up, why did you even look at downside stuff? Because it was a narrow rally. There were a tremendous amount of stocks that looked terrible. And so you scan for the terrible stocks, which we will also go on into in the class. So I go over 3 indicators. They're totally free. Now, I could use a number of other ones, and a lot of them work. These are just the ones that seem to help me the most with direction. I also look at correlations that indicate direction, which might be companion stocks, which I'll also go over, and correlated indexes, futures, fundamental factors. But, and this is sort of going on wanting to join my chart patterns mastery room, is every day the conditions change. One of the things I pride myself on is finding what traders are keen off of today. We've had a good track record over years and years of finding those keys. And what are my favorite sell signals? So who is this for? This is, I got to tell you right now, it's for traders that want to trade up and down markets with confidence. And the way you get confidence is repetition. And the other way you get confidence is simplicity. So you want to find the most basic charts to start with. I'm telling you right now, when I've messed up over the years, I always go back to these patterns and these indicators because they have so identifiable patterns. And I have the confidence that they're going to work because you know where your objective is and you know where your stops are. So this is for consistent opportunities in this post-bull market. So funny to say the post-bull market when the market goes crazy today, but we'll go into that in a minute, why I think the next 8 years, let's say, I think are going to be amazing on the short side. And these apply to future stocks, Forex, option traders. And just to let you know, we've even traded Bitcoin, but I'm not going to trade a Bitcoin unless I see a readily identifiable pattern. This is also for all levels of traders. I've used them successfully as a novice. And one thing I didn't mention in here and I'll go into it, but when I taught traders for 10 years, because I traded upstairs for an electronic trading firm, and I was in the top 5, like Sherry was nice to say. But I also taught a lot of traders. I opened 5 different offices for them in Atlanta. And I taught all kinds of traders, brand new traders, traders that were on the floor, institutional traders, and the same indicators in the patterns that worked when I even started, or then when I traded for the day trading firm, they still all work. The bond market bull run is over. Now, I'm not saying it's over because of the Fed or this or that. I'm going on trend lines. And the trend line of the bull market has been upward sloping, and that's of the bond prices, which means the interest rates going down for 41 years, ever since 1982. So the key in there is every time that the markets have looked like they're going to do poorly, even 2007, 2008, even in March of 2000, they eventually come back and people are bailed out of their long positions because interest rates are so low. Guess what? There's nowhere else to put your money. So just keep that in mind and look at this right here. This is a big deal. With interest rates high, investors can put their money in safe interest-bearing instruments other than stocks. That doesn't mean markets have to go down. What it means is this: when bad news or bearish charts are present, they're more likely to negatively affect the stocks as opposed to when bonds were in a bull market, because you can put your money in interest-bearing things that are amazing of how much the interest rates have gone up in 2 years. I'll show how to combine chart patterns and my favorite indicators to help initiate ways to play markets. And like I said, stocks, futures, you can play Forex this way. You can play Bitcoin and play them to the downside. So I'm Chris Brecher. Forget about this. I mean, try to take this off. This will probably break your computer screens. So I would take that off if you could. But I've been a professional trader for 42 years, including 8 on the floor of the CBOE. I've seen all kinds of markets, and I've adapted to changing market conditions. Keep in mind, it's not always the bonds. It can be fundamental things like the economy. There's all kinds of factors, and those are things that I like to share and teach in the class and into my subscribers in the Chart Patterns Mastery Room. So I did turn 200 into 20,000, believe it or not. And I'll just tell you real quick on how this went is I started as a clerk on the floor. So I just started, and basically before that, and I guess I should say this, is I started right after college. So I was a paleontology major. Yeah, digs, dinosaurs. Just keep that in mind in there. And so what happened? I came out of college, didn't get a job in paleontology, didn't get a job in marketing. I went to work for a boiler room. So a boiler room is when you have a whole row of people and they're all taking like 1,000 of a phone list of potential clients, and you're calling them over and over and pitching stocks. Now, this boiler room, you weren't pitching the IBMs, you were pitching the crap stocks. So all the stuff you've seen about Wolf of Wall Street, guess what? That stuff's true. I will not go into that, but I'm just telling you that movie is a lot more realistic than you would ever think. Well, that whole year, everything I pitched went down. Everything everybody pitched went down. So they were sitting around taking shots in the option market. They couldn't make any money in options. They kept buying them and they weren't making money. I'm like, well, who's the other side of this? I want to be the house. So I went to Chicago, basically got a job as a clerk on the option floor. And I was lucky enough to be there for the August 82 rally and to be in the Sears and Dow pit where there were 2 major market makers. And they were sort of like Lee Trevino when it comes to golf. They talked out loud when they were nervous, and they would talk about correlations. They would talk about the bonds, just like I always obsess about other stocks. I really absorbed everything. So then I went to work at a discount brokerage firm for 2 years. Why did I leave the floor? Because the discount brokerage firm let you trade commission free. So I took $200 from a plane ticket my parents sent me to go to Asheville, doubled it that day in Bally puts. Yeah, puts, went short. Then took the other $200 and over 2 years turned it into 23,000. But I want to make something really clear. I didn't have one big win. The most I ever made in one day was $600. I just made money every day. Consistency, grinding it out. And it's easy if you love what you do. And I love doing this. And I want to teach you the passion and the ways to do it that would make you enjoy trading when you have higher probability patterns of success. So why do you need me? Because every day I'm looking for new ways to help with that success. Every day there's something else. I try to be creative, whether it's playing gold, whether it's playing oil, whether it's playing bonds or Apple or NVIDIA. Every day I'm looking for new ways, even though there's some basic stuff that works. And that basic stuff worked when I first started, and the basic stuff worked later. Now, let me just mention, I just mentioned that I was a clerk on the floor. I learned about relative weakness, relative strength, and correlations. I didn't mention charts. And the reason is when I got working for this discount brokerage firm, people called up and you had to take their orders, you write them on a ticket, and then you call the exchange. Well, I was starting to get a really good feel of the markets and relative weakness and strength. And I did something totally probably regulatory wrong. I would tell people, are you sure you want to do that trade, this and that? And it came to where they started asking for me to put in their orders, and then they'd ask me opinions, and they started giving me in reward some chart books and a lot of books. People were so encouraging, and that's where I also combined what was going on with charts. And that's how I was able to add charts to my feel and that repertoire, so to speak. So the other thing is short selling. It's a huge advantage to subscribers because so many only know how to buy. It's great to be able to play both sides of the market. And keep in mind, even in the big old bull markets, every day there's a bear market somewhere. So as the bond market starts to crumble, which we've been seeing, big moves lower are expected. What goes up must go down. In stocks, I'm not going to say they exactly go down 3 times faster, but for all of us that have traded some of the real patterns that I talk about in the class, and I'll sort of throw them in tonight, the tighter the pattern, the easier it is for stocks to go fast down. So just keep that in mind. I traded on the floor a long time. I show how to trade options. I show how the time premium. Do you use spreads? Do you buy out of the money? Do you buy in the money? How far out do we go? And those are things I'm really good at. So this is what happened now. This is the bond futures. This is what I'm talking about, this chart. Now on TradingView, it only went to 1999. So just keep that in mind. Just went to 1999, but this went all the way back here. That the bond prices have gone up or the yields have gone down. As you see, all these points of contact, and it broke. Doesn't mean you can't have a big old rally, but the key is that last time this happened, where the bond market went in a bear market, things definitely just sat in a range for years. So right now, when you're spoiled thinking you'll always get bailed out on the upside, heck, for 8 years back then, they didn't. So prices go down at least 3 times faster, and they might go down 1 time faster, but I'm telling you, I saw it today. The market's ground up all day. And like an NVIDIA ground up all day. And then at the end, that's what we're talking about, going down 3 times faster. So if you bought options that expired tomorrow right here, call options, you might have lost being right. On the other hand, if you bought put options that expired tomorrow, it went down so fast, the time premium basically made you made more on the momentum than getting killed by the time decay. So just keep that in mind. It's very, very exciting to play those fast moves, the immediate gratification. So Wall Street bets, this is a interesting subject. I was right there for it. So was everybody else in here, is basically in the COVID-fueled stimulation by the Fed. So a lot of people had a lot of money in their pockets. They went and they started trading on Robinhood and were buying the speculative stocks like crazy. So they were trading the GMEs, the AMCs, but I've heard more stories about how people made a ton in 21 and they lost it all in 22. Now, keep in mind with what I do, I also try to show money management. We talk about twosies all the time, which means that if you make, let's say, a double, I'm not guaranteeing a double, you take out one and then you're playing with the house money. Same thing with the Wall Street bets crowd. If they knew money management techniques and how to play on the bearish side, they'd be cleaning up. Here's a recent article from the Wall Street Journal. So trading in the stock market just isn't much fun anymore. Now, you might have thought this was from after GME and AMC crashed 2 years ago. This is from 2 weeks ago. Yep, everybody's psyched out. And if you read the bottom, guess what? Many have learned it's tough to make money when stocks aren't steadily climbing. I have no idea why. They should be learning on how to play the downside. This is AMC. This is a beautiful thing. I just got to show you this from 2021. AMC went up like this. So maybe you were lucky enough to make that. But what happened was a lot of people kept buying when it had dips. Heck, if you liked it at 300, you love it at 200. That's not the way to trade. I'm telling you right now. But that pattern right there has been my go-to now for 41 years. And anybody can learn that. So, and I go in the techniques of when it looks like it's more reliable than other times. I combine trend lines and I combine some real simple indicators. Then guess what? Look at that. All that consolidation here and all those trend lines. And when it broke, well, AMC has never been the same. GME, same thing. Boy, look at this. And this is a perfect example. So this stock had ground up. Well, it got, traders got ground up, but it got ground up all the way here for weeks, right to here, and then had that final crescendo up. So just take that right there. Let's say that's 30 points on the upside, let's say in an hour. Well, guess what? In the next hour and a half, it went down 70 points. Yep, it went down 70% in 2 hours. And you might say, well, there was no way to gauge that. There sure was. Look at that. And what's beautiful about that is you might say, oh, that's GME. That never happens again. That just never happens again. Well, let me show you this. This is an exciting thing. Here is Apple. And I go and I research these things for you, and I try to find what I can for you. So you're looking at this right now in GME. And you might say, yeah, he's just typing a class because of that once in a million pattern. Go and check out Apple back here. This is July 5th. I don't know about you, but that sure as heck looks familiar. Yep, there you go. Familiar patterns have familiar results. Isn't that amazing? That's Apple. That's Apple. It's amazing. So just keep that in mind. And they're just fascinating that history or chart patterns repeat themselves. Similar charts have similar results. It's amazing how similar they look. So what did they all have in common? What I just showed you, easily identifiable bearish chart patterns. Now, let me just tell you, I've been married 28 years. My wife has put up with me, bless her heart, with being a professional trader. But I can't tell you how many times I said, you can see this pattern a mile away. And she's like, no, you can't. Well, guess what? She's like, yeah, those are great examples. So I'm telling you, the more identifiable, the more likely it's going to work. Warning signs are really important. Like I said, Robinhooders ignored fundamental and technical warning signs starting in late 2021. It's not just the technical, but that would have worked for you. But it also would have helped them avoid disaster. Last week, somebody liked the chart in Meta. I still call it Facebook. Stock on a short term that day looked like this, a perfect bull flag. But there was a gigantic amount of resistance overhead, and a lot of other indicators and correlated indexes look terrible. And this person asked, I'm thinking about buying it. And I'm like, just watch all the other correlated stuff. I don't want to discourage somebody, but I sort of want to put the birdie in the head to watch more than that. And sure enough, the stock went down like that. And I got multiple likes from that one person. But it was real. Sometimes it's about not making money. It's about avoiding disaster. There's the 10-year note rate. This is 1974 when it went up. Yep, and the markets did nothing. So the whole point of that is, like I said, there are other places to put your money. And the point of that is when you see that, you might not get bailed out of a long for a long time. If you blindly bought back then, yeah, it took years to break even. Now, let me just tell you something real quick, really interesting. So I go into the money show, and you have to understand that I'll talk to anybody about the market. I don't care if it's the president. I don't care if it's Powell. If it gets to the market, I'll just bring it up all the time. So we go into a room because we were going to record a special segment for this. And a person was setting up, and they had up, it's a Bloomberg big commodities person, which I didn't know. and he had up a slide up there about the biggest bubble of all time. And I go in there and said, I bet you mean now. And he's like, you're darn right. That's what I'm talking about tonight. And I said in my webinar, I was going to show the slide of 73, 74. He's like, and I said, I'm going to take it out because it's too far ago. He's like, no, you got to keep that slide in. That was a big deal back then. And as you see, it took a long time for the market to go down. And what you're also going to notice, even in that bear market, there were some sharp rallies, but the sell-offs were great. So the bull market for bonds, like I said, August 1982, and the bond rates have been in an uptrend, and then Volcker decided that finally inflation had been conquered, and it resulted in an explosion in stocks. 82, I was on the floor. I know what day that started, right in early August, and you went straight up. The thing is, there were still bearish ideas in there to do all the time, all the time. Did I make money in the crash in 87? I sure did. What a lot of people don't realize, because you don't see it on here, there was a crash in 89. It was only a 2-day crash, but sure enough, did well in that, then in that. So there are always these kinds of ideas in there on the bearish side. So the bull market for bonds is over. And as you've seen, bond rates have surged higher the last 2 years as the Fed is finally pivoted to fighting inflation. It's the first time in decades. So there's the bond market rolling over. Now, the first thing you might ask, well, if the bond market rolled over here, why the heck did the GMEs and AMCs and the whole stock market go up there? Because the first sell-off of bond futures is usually because the economy is starting to strengthen, the post-COVID economy. It's the second leg down. This was not the result of a good economy. That was the result of the emergence of inflation. And that's why 2022 was so bad for bullish people. So I trade long and short. Just keep that in mind. We were going over at dinner one night about my biggest wins and my biggest losses, and it's half and half on the big ones. In the long run, though, I love playing the short market, but darn right I'll find long ideas. Keep in mind, we bought bonds last week, believe it or not, because they had a bullish pattern, and we rode them into today. So I'm not a perma bear. I'm just an opportunistic bear. So here is an idea for you, an example. And this was a beautiful example about combining charts with fundamental tendencies. And what happened in here, WAL is a regional bank. So what happened in here is the bond rates went up. So up a lot, as you know, up a ton. And the key in there is that I don't have the slide in here, but from the Federal Reserve and the Treasury, you could see that in 2021, the 2-year note was like 0.11. And this year it's 5%. So if you deposit your money in WAL, they put their money in bonds. So basically what they're doing is they're getting a higher yield than what they pay out. The problem is that now when interest rates went up so fast, all those bonds they bought are getting destroyed. So their portfolio is destroyed theoretically. In 2 years, they'll be fine. But crowd psychology, they destroyed all these stocks with big old T-note holdings. So, and what happened is this, everybody thought it was going under. It didn't go under, but the point is that the scariness, not that they had losses on the books. It's that if people started taking their money out, like 1929, getting sort of a run on the bank, that didn't happen. But there's a big but. You did rally back to this. So you might say, well, why did you care about fundamentals then? Because this bounce corresponded to a rally in the bond prices or a temporary low in yields. Once the yields resume their upward trajectory, guess what? Then you can combine the technical part. So this rallied right to resistance. When things, and you'll find in the class and in our room, when things rally to resistance, that doesn't blindly mean to short it. It means to look for those reversal patterns. So what we did in here is bonds had already sold off, like I said. So we were looking for the reversal trigger in a lot of the regional banks. I picked on WAL because it's one of the most expensive. We also played PACW, but it was only an $8 stock. So here we go. Doji at resistance. That's the one candlestick I'll give you. Indecision candle, follow through candle. So what happened in here? We went and we shorted this. So just keep in mind in here, when this reversed like this, we determined the correct option strategy to implement. So it usually has a 1 week delayed reaction to the bond market. So the bond market, or let's say rates, were going up. And this was against resistance. And it had a reversal candlestick. 3 reasons. I can't impress enough that when I don't have 3 reasons, it's not an A trade. I like 3 reasons to do a trade and 1 reason to get out. So the first thing we did is we bought a put vertical debit spread on the first break on a 1 hour chart. So look at the day of this. It was August 9th. This is an actual copy and paste from Thinkorswim. We bought it at $1.95. Now, because it just started to break down, but it looked pretty bad, we didn't buy the August puts. We bought the September. And I don't like buying put premium unless I see a defined ultra short-term pattern. I like buying vertical debit spreads. So you're basically buying a put and selling another one to sort of defray the time premium. So we bought it at $1.95. But I want you to see this because a lot of people think I trade just every minute and that's it. Nope. I do things sometimes for 3 weeks, sometimes for a month. This one was August 9th. Just keep that highlight in there. So the stock broke. Yeah, the stock started breaking. And that's the first break. Then what happened? We exited on the break to support. Yeah, we stayed in that whole time, right in there. So now keep in mind, that was an hourly chart. Look when we sold it. We sold it 6 days later at 260. That's a good percentage return. Also, keep in mind, this was scalable. I'm showing one, you could have traded 50. So here we go again. Western Alliance rallied back to the gap. This has been a textbook stock for 3 months, where what it did was it would gap down, it would fill the gap, it would gap, then it would come back eventually to fill the gap. Now, the problem on this one is the word eventually. It didn't have a tight pattern yet. So it's sort of like around Halloween, you watch the slasher movies. You know the bad person's coming out. You just don't know exactly what time or what day or what door they're coming out of. So when I'm not sure of the exact timing, we're not just going to buy a put. We're not just going to buy a put debit spread. We went and bought a put butterfly. So that is, we do directional butterflies. And this was in the direction that I thought it would eventually go. Look at this, August 24th. And we bought it at $1.38. Risk reward was great. I wasn't sure when the bad person was coming out, but the patterns and the writing was on the wall. Yep, it broke. What are we talking about? We're talking about this trend line right there. And I'll go into those patterns in the class and also in the chart patterns mastery room. Now, these are all trades that I posted for everyone. Just keep that in mind. It sold off, and it sold off to support. $1.38 to $2.25. I'll take that any day. As you see, it wasn't a day trade. It took a while, and I'll go back and show you. There you go, $8.24. So we bought it at $1.38. 9.6. We sold it at $2.25. You could have done as many as you wanted. Why do I say that? I was on the floor. There's put fly traders. They're butterfly traders. All they care about is a teeny bit of edge and theoretical values. They don't care about bull or bear flags. That's a big advantage for us if we can add that to our trading repertoire. So you could do this in size. I just want you to realize it's not like you could do a one lot. You could have done a 50 at that price. So here we go again. A beautiful thing. It rallied to resistance. As you see, it rallied to resistance in here. But we don't have that tight pattern yet. So guess what? We did another put fly. This one in October. And we bought it at 205. And bless its heart, it sold off just the same way. Now, let me just tell you, there are certain patterns in here. I'll give you a teaser that were layups and we're using trend lines and chart patterns. But I just did it on rallying to resistance. But I didn't show the exact trigger and timing. And that's why we did it as a put fly. Earnings sell-off, we sold it at 290. So you go back, 205, 290. I'll take that kind of percentage any day. But there's more. Yep, that day of the earnings, guess what? This, I'll just give you a teaser. It's called a Brecher ledge. I don't know who that's named after, but it's coincidence. It sounds familiar. This is a tight pattern. When you see that tight of pattern, you can trade more aggressively because it usually resolves itself fast. So what do? We bought a put and we doubled our money the same day. So here's another one. Now, I showed this earlier. About Meta and about how we got into early. And we did. No doubt about it. We got in. I didn't have 3 reasons. Big old resistance right in this area. Right where it broke. Right here. Not here, but I'll show you. All the way here, you could do a gigantic trend line all the way around. The problem is it's a zone. So when it got to here, yep, I posted the short. We lost about a point. But guess what? Some of the things you're going to learn in the class is what triggered us to look for the reversal. Well, guess what? If that looks like that Apple trade I showed you earlier, it sure does. So we lost a point on the way up. We made 4 points on the way down. There you go again. Reversal pattern followed by a consolidation. I go in with a ton of slides in the class about that. Probably too many, by the way. I love to show examples. Repetition. Repetition is the key. So yesterday, SMCI earnings yesterday, last night, we weren't staying in for earnings. We were looking for that. We like 3 reasons. So I'll just show you 2. Breaking this indicator, which I'll go into in detail in the class, and this trend line, which I will also go through. But just keep in mind, I posted the short here and look at it down here. If you were only looking here, where should it stop? It should stop at prior support. That's where we covered. We made a quick 4 points. So the key takeaways in this is the advantage for put buyers is the free fall. You just saw them, identifiable patterns and how fast they can move. And the problem for the call buyers is that grind higher. Now, don't get me wrong today. You had some quick moves to the upside, but I'll tell you right now, there are going to be some great short opportunities because the faster you go up, the less support there is on the way down. So just keep that in mind. So what if you could turn the pullbacks and down moves into consistent gains? I'm telling you right now, just go back and look at this Apple again. Look at that Apple. That's what I talk about, consistent gains. Next thing I want you to see in here is this. Go and look at Caterpillar today or Home Depot. Look at that straight up move. It was just 275, it's now 294. Keep in mind that there's no pattern here that looks bad yet. But when it does go down, because right now it's overbought in a downtrend, there's not going to be a lot of support on the way down. But you got to wait for those triggers. That's what I try to teach. And this is the other thing. I'm there all day. I have 6 screens. I'm trading all day. I'm looking all day for correlations. I try to be at my desk all day. I'm not exactly at my desk like exactly every minute, but I would say 95% of the time I'm in front of the screens. I'm on an hour in the morning an hour in the afternoon. I share my screens all day. All day I share my screens. And if I see something intraday, I'll jump on. So I like to teach. I like to put in alerts when they're good trades. I'm really good in there about showing edges, trying to show probabilities. And I try to identify support and resistance, and I'll teach you on the best ways I've seen to identify it and knowing when to trade options or stock and trade live. I put on 3 to 5 trades a week. Sometimes it depends on the day. Sometimes it might be 3 to 5 trades in a day, but just keep in mind, it's all about your position. If you're a part-time trader, I'll put on the alerts if it's a trade that's going to be overnight or maybe for a week like you saw the WALs. If it's a real snap trade, I'll try to make that clear. So you'll have to be near your phone to get the alert. So the class will be about how to trade pullbacks with short setups. And like I said, look at this again. You don't see a short setup at Home Depot. Don't think I'm a perma bear. There's a time and a place to play this kind of stock. There's a bearish pattern, but this isn't. So we didn't look at shorts in Home Depot. There was no reason to. On the other hand, when it goes up parabolically like that, I'll be looking for reversal patterns and consolidations afterwards in the class. I will be going over reversal patterns, how I find them, chart patterns, what a top looks like. But you know what? You can go to Investopedia and look at tops. I show rollovers. What is a rollover? What indicators? What consolidation patterns? And what stocks and options I use to take advantage of those pullbacks. Now, keep in mind another thing. Correlation and companion stocks. Really important. And that's one of the big things I teach is what to key off of that day. And that is trainable. And the patterns and strategies that stock traders and option traders can use right now on the short side. So definitely you can trade live with me Monday through Friday in our chart patterns mastery room. The system doesn't require any fancy indicators. Now, keep in mind, they can help. Whatever gets you to the end game of consistent profits. But I've just found for me, I haven't needed a lot of indicators. I just get it makes my head almost blow up with too many of them. I also try to pick a few pools of the market to focus on. Some days, if the bond market's getting destroyed, darn right, I'll look at interest rate stocks, interest rate sensitive stocks. Play them on the short side like you do with the REITs or the utilities. Some days it's the chips. Tomorrow's going to be tough. Apple's getting nailed. Correlations, NASDAQ. Apple with the NASDAQ, which means I'll look for bearish patterns in other NASDAQ stocks. And I want you to practice and understand those simple chart patterns. Even if you're brand new, these simple chart patterns can be a way to start making a living right away. Doesn't guarantee it, but they're high probability trades if you combine it with all the things I want to show you. So the strategy class, $797 includes this class and putting up with me for an entire quarter. So you get a quarterly of the chart patterns mastery and this room. Now, if you really want to go crazy in here, you can buy the annual one that includes a year of me. Yes, if you have insomnia, I'm the perfect excuse to buy this. I'm telling you right now. So the short selling class on November 11th for 4 hours. Now, keep in mind those 4 hours will probably have 15-minute breaks in there. I'm not going to go a straight 4 hours, but I'm going to go into those 3 simple setups. And just like when you practice on a golf range or in baseball or in tennis, it's repetition. And I'll show you those setups and we're going to do repetition. And I'll give you a precise entry trigger and exits. But let me tell you right now, sometimes, like I said, it's an accident waiting to happen. So sometimes we do them as longer term trades, and I explain why. And I'll show you the favorite setups for day trading, like I showed you that Brecher ledge, swing trading, like I showed you that long-term trend line. And like I said, you could trade ETFs, options, and futures in all market conditions. So there I am again. I'm telling you, I tried to get rid of this here, and I'm sorry about that. but I'm on an hour in the morning, hour in the afternoon, and definitely all day trading. I'm trading in the background with my own money. And I will show you my setups, my strategies, and my market feel at your own pace. I don't want to force you on this. And the other thing, really big deal. I'm really into interaction. Our room is a community. There are a lot of great ideas. They help me as much as I help them. Sometimes Fed things, news, indications, charts I hadn't even thought of. We try to help each other. I encourage participation in the chat, and the more questions, the better. No question is dumb. Just keep in mind that I absorbed a ton when I started by asking a ton of questions, and I encourage it. You can get, I'm not really good with this sales page, but you can get interest-free payments with PayPal credit. Yeah, PayPal acted pretty well today, and I think that's because of this slide. So again, sign up for the strategy class and the mastery today. Just keep in mind that this offer is only available until the class goes live. So right up to November 11th at noon. So thank you for listening. Now, this is the next part of this that I thought you'd really like. There's going to be a ton of questions about things, about just legitimate questions about whether you should take the class. So let me just give you some of the questions and I'll answer them. So one, what indicators do you need? Well, the free indicators that are included on most trading platforms. I use a number of things. I use FinViz, I use Schwab, I use stockcharts.com, I use TradingView, but most of the indicators are free. And I'll give my exact settings and how I use them. Now, how is this different than other strategies and courses? Number one, I've been doing it for 41 years successfully. Number two is I trade all day, day in and day out. I love doing this. My wife, it drives her crazy. She puts a cutoff time after 4 o'clock of how long I can talk about the markets. So just keep that in mind. And also, I'm showing creative trades. I'll show short trades in up, down, and sideways markets. Keep in mind, this is about the art of selling short. So this class will be about how to play pullbacks. And you can trade this part-time. Like I mentioned in here, there are times where I put the alerts where they're day trades. There are times when I put them as 2-week trades. So you don't have to be there every second, but I try to put on the alerts the time frame of the trade. So just keep that in mind, that you also get the trade alerts you can follow even if you're not watching the market. And these setups do work for Forex and crypto. Now, I don't trade Forex, but crypto, like I said, if I see a really layout pattern, darn right, I'll trade it. Now, crypto, you can also trade ETFs that bet on it going up or bet on it going down. And there might be a lot more of them coming out. And I will take advantage of those if I see the correct chart, the chart setups. Now, do you need a big account to trade this strategy? No. Now, one of the reasons is that the things I show you, some of them take very little money to put up. So if you buy a butterfly at $1.38, it's $138. That's all you're risking. Now, keep in mind, I have 2 accounts. One's a big account, and I'll trade things like shorting the SPY and the QQQ. But I also have another account that had $37 in. I wasn't even going to trade it this year. It's up to $900. The reason I have that one, the pattern day trading rule. I have under 25,000 in there. You only get 3 day trades. So it's really important to have that kind of setup, that kind of account, so I can show you that you can stay in things overnight at times. So you can start with a little amount of money. I'm not guaranteeing you're going to multiply it, but I'm just telling you, you can start with a little money and gradually move up. And if you don't know a lot about options, this can be done with stocks, ETFs, and a lot of the option strategies I show you are simple, like buying puts. But I want to make something really clear that's really better than when I started. And that's that free commission when it comes to stocks. If you use like Thinkorswim or Schwab or most of the major brokers. What that means is, let's say you're scared to trade NVIDIA, but you see a bear flag. Heck, you could trade one share. You can totally unemotionally trade one share. Keep in mind, in NVIDIA, that's still $400. So you could go trade one share of Apple. So just keep in mind, you could trade 10, you could trade 100. If you go in and out 10 times on one share, guess what? You haven't paid any commission. It's a beautiful thing. And this class, what happens if you can't be there? I rarely repeat it, but if you sign up, you can get the recordings and still qualify for the special discount we're offering. Now, the difference between the class and the mastery, the class is going to be slides. It's going to be repetition. It's going to give you all the tips and tricks I show, but just keep in mind, every day, the tips and tricks might change. So all the different correlations, different companion stocks, every day that can change. I like starting with chart patterns, but every day those change. And that's why the difference between the class and the mastery. But I'm telling you right now, if you take the class and then you go in the chart patterns mastery room, you don't have to do 20 of the trades that might be creative. You can stick with the bearish flags, the bearish Brecher ledges, and you can probably do great just doing it that way. The other thing, can it work with other strategies? Yeah, it could work with a ton of other strategies. I like the idea of the identifiable chart patterns, and you can combine it with any of the tools you probably already bought. And if it works for you, great. Usually they complement each other. I've seen that most of the strategies and tools line up with the things I'm showing. And the trades in the week, it's a mix of day trades and swing trades. And like I said, some days will be a lot more active than others. And definitely, if you're new to trading, these identifiable patterns are a way to build confidence. So thank you for being with me. I think that's about it, unless there are other questions that I can answer. So just like I said, thank you so much for being with me. And if you're in the chat, I'm always happy to help. How do I scan for opportunities? Great question. So there are a lot of ways. I know you're probably hate hearing that, but basically what I'm doing in there is I'll look, let's say a crossover. We did it today, where we look for stocks that started to act weaker than the broad market. So they crossed over a certain indicator on a 2-minute chart. So we go in the Thinkorswim and we'll create a scan, and then we'll pop out every time that criteria is met. That's one way we'll scan for opportunities. The other way is definitely overnight. Definitely we'll change our time frames. We'll look for consolidation patterns on a 1, 5 hourly, a number of different ones. So everybody take care. Hope you enjoyed this, and I will talk to you later. Thanks so much for taking your evening to be with me.